You're a buyer and you're like, hey, the interest rates keep fluctuating. How does that affect me as a buyer? Well, I'm Casey Jenkins with Oak Realty, and let's talk about that because interest rates make it so you can either buy more of a house or buy less. And by that, I mean, the lower the interest rates, the more house that you can afford. So if the interest rates are in the 6s and 5s and 4s, you can afford more house for the same amount of monthly payment than if the interest rates are in the 7, 8s, or 9s. But on the flip side of that, the lower the interest rates, the more people that are going to come out to look for a house. And so if you have more people out looking for a house, the more that you end up with lots of multiple offers. So it actually pushes the house up in price and might push it out of what you want to afford or what you can afford if you get enough multiple offers. So interest rates, while they affect, yes, if they come down, you can buy more house. On the flip side, it also allows everybody else to buy more houses, which brings more people out into the market. So for sellers, this is fantastic because it does push the price of the housing market up. It does get them more money, all of those things. But for buyers, it makes it so you've just got to compete a little bit more or be a little more creative in looking outside those picture perfect HGTV-ready homes, to purchase your home. So if you're sitting on the sidelines, don't wait for interest rates to drop or fall or go up or whatever you want them to do to purchase a home. Make sure you're purchasing a home when you can actually afford a home and when it's time for your family to get a home, whether that be your first home, second home, or third home. If you're going to try to time the market and wait for rates, you might as well just throw some money out the window as you're driving down the road, because if you try to time the market and then it goes down and all the buyers come out, you're probably going to be paying more than if you bought at a time when the interest rates were higher. You paid a little bit less for your home, you refinanced when those interest rates drop, and now you get to cash in on all that equity that you earned without actually having to pay for it. So that's how rates affect buying. It basically affects your buying power. So the lower the rates, the more money you can afford and the bigger house you can get. The higher the rates, and you get the opposite. If you've got more questions or you're thinking about making a purchase, give us a call. We'd love to help you out, walk you through what personally you can get, as well as talk through your personal situation to see if it's a good time for you to purchase or not. So don't forget to like and subscribe.